Hi guys, just a really quick touch up on where we were last time. I'm not really too sure. It's been a while. I've been a bit busy, that's why nothing's been added. But I believe we were at this market. It just started to rally up. Um, I may be wrong. I mean, we could have been back here. But I just want to touch up over a couple of things that were on my chart, just to keep you all informed. Right. So this was just a short-term trend, just because I saw this break up, this rally up. I just wanted to really know where I was in the market. We obviously had the buy up moving out, but then sort of around this previous bounce of that high, and obviously this sort of tapped the support zone. We saw two taps on, so I just really wanted to see look an ascending triangle pattern formation. So just wanted to see really how this was going to work out. So I drew it from the close. This looks differently because it was on a different time frame when I drew it, and we had a breakthrough. Now this is multiple confluences, as you can see there, testing the bounce. This is because here we have the break, and what I thought was going to be a retest. So I already pre-drew this on the previous support as well, which is inside. It's the lowest low of inside our support zone. So I drew that over, and then we had a divergence, as you can see from here to here, a bit of a divergence trend. Obviously, it did not touch on either of these. So I went from point to point. Now, as you run these point to points, this was drawn around about that spindle there, the spinning doji. So we just wanted to know really that was a very clear sign the market was going to push up. Was it going to push up to here and then sell back off? It gives me a good insight when this was being drawn, just to sort of know, like, I'm not going to change my mind on it, but it's just nice to then give myself that peace of mind for where that trade's going to be. So it always helps having all these extra little things to go. "Oh, okay, it's all right." And as you saw, we got the breakthrough, come down to the retest. So we had one, two, and three confluences there. Come down and actually touched that price range and then pushed back up since there. Obviously, we had a bit of consolidation. I had these are little support zones. It's now where my stop loss is on this orange bar. The reason for this support, as I've said before, old resistance is new support. We got one tap here, another tap here, a couple of little wick rejections at the bottom. So a little bit of consolidation, really small amount of consolidation around that area. So I just drew it across. You can see it sort of, you had the buy up, instant sell off, never happened, push back through. The next area of resistance, which could become new support, was here. And again, you had the buy up, as soon as it touched, you had that sell, spinning doji, and then it worked itself back up, and then pushed straight through that top. As soon as it realized it was coming through the top, it shot up. So then my next wick was my next resistance level or support was in this zone. This is quite a big zone. So again, this is the maybe zone. I'm not too sure where around this could bounce. I'll be keeping an eye on it the whole duration of where this area is at. But the only thing that keeps me happy about this is one, this price has not hit it yet. Two, even though we had that oversold there, which then pushed, down to that bottom, like we say here, and we push it down to the last support, which is exactly why my stop loss is here now. Um, this is another reason. Sorry, it's a bit late. Keep on losing track of what I'm about to say already, boys. I'm saying it. So I know that it hasn't touched this area yet, and I'm sort of expecting that buy up come up. It's just a bit. It just doesn't feel right. It feels like it's ready to push back further up. It may not. It may come down to drop out. It just seems a little bit odd with the amount of buy purchase we got that it wouldn't push. We may see this come down to this level again and push up. We may see it consolidate at this range. Might push up. It might come down completely and then cut into which I would then be reversing the trade. I am a reversal trend trader. A lot of people lose money on reversal trend trades this way that I've done it by using the RSA to highlight key areas of support before they are supports, and key areas of volume without any other indicator showing that they're volume support levels. This is how I use it, and it's had brilliant success rate so far. But currently, this is where my stop loss is at. So prices come up and push back down. See, one thing I do want to go over is this bar. Let's put it across here. These two sell-offs here, we get a lot of people sweating. The reason for that, what the hell is this all about? I don't know where that would ever be useful. Was it these sellouts when you're on the mobile looks a lot bigger. So we had that one massive sellout, obviously this buy up, and I was like, oh, okay, we're looking for this higher end, and this buy up, and then that candle just pushed and pushed and pushed. By this point, the entry was here. You were up nearly 400% on the initial trade lot size, and it just dropped by like 250%. You're now only 100 to 150% up on your actual your trade. So it's amazing how much money that just lost. And a lot of people then start sweating and think, oh, it's going to go against me. A lot of emotions come into play, but it's true to stick to your trading plan. I've said this many, many times, and I'll continue to say it in the future. Stick to your trading plan. Have confidence in it. If you're not having confidence in your trading plan, then you shouldn't have a trading plan at all. You need to work on a new one. So what happened is this come down and it come down. It pushed further down. Now I was in very good confidence that this is probably a new spike. As everyone knows, the coronavirus is spreading volatility across all markets. Most currency pairs are down. The US stock exchanges mostly down. The FTSE is down. The indexes are down. Everything's not really having a good run with it. However, so I was expecting this to sort of be a news thing. I'm not a news trader. I don't keep up with news. It just seems like too much effort for too little reward. Unless you're just gonna, only trade them little moments and try to get them that small amount of pips. I don't look for small pips. I look for the big pips and let my money make itself. Let it run whilst I go and do my own things. But as we saw it, I just held on. Just held on, and is really quickly in the last, I think it was the last 10 minutes of that candle, it pushed all the way up, and then the sellers come back in and it closed up. That was a very, very good sign because the sellers got all of that power down and they ran out of it. The buyers ultimately come in a good favor, nearly half of the original candle, with a massive wick rejection. The buyers come into complete favour. Now we saw was another buy up with more sellers coming in. And the reason, like I always say to people that mentor, is to show that, to learn everything, learn absolutely everything, even if it's not the way that you want to trade. It's because it gives you an insight into how other people were trading. So the reason that this big sell off could have happened as well is they were viewing this as a double top. Okay, so they were viewing this as a double top, and they were saying, "Oh, is it a high, nearly an all-time high?" Let's have a look. Yeah, so you got a double top over here on the daily, and you've also got a double top reoccurring on the hourly. So a lot of these then probably thought this is my moment. So a lot of them jumped into that sell. That's just an insight into how other people will trade on price action. There could be another 100 other reasons to why people may have traded that style. Also, that's why when you get EMA crossovers, you get massive volatility again because a lot of people trade off EMA crossovers. But where I had trust in my trading strategy, I thought that this was going to continue up. So I held it and held confident, and it did. At the moment, we've got this could be taken for anything really because it is late hours. This could be really just not enough people trading on this market. The momentum's very low. This could consolidate a little bit, and we could have a major drop off. Like I say, it's just to stick to your guns. You don't know yet, but currently on this position, and this is what I was saying before in the last video about people being scared of their losses. As I said before, that was a 200% loss on your initial trade lot size. So say you traded, 1,000, you would have lost 2,000, which is why risk management comes in. So say you only want to risk 1,000 on that trade, you would have only put the lot size in at what, £500. And the reason you would have put it at £500 because it's 200% loss on the way your stop loss is. So that £500 would have actually been £1,000 lost if you were to lose that trade, which it did. And a lot of people would sweat over that. They'd say, "Oh man, that's terrible risk management. You're going to blow accounts doing this." Blah blah blah. I've been in this a fairly long time, and I've blown one account when I ever first started, and that was at £1,000. I've never done that since, and the reason was I was not trading this way. I was very much getting in there and worrying too much, let my emotions trade over. And as soon as I blew that account, I thought, you know what, fuck it. I'm gonna give it one more go. Sort of stick with it with little bits of money here and there, and just see how it plays out. Like I'm not going to stress about it anymore because I could do well on a demo, but I can't seem to do well on the live when I first started. And that was because my emotions were in the play. I couldn't give a shit about demo money. So how come I was losing on my own live account? Because I gave a fuck about my own money. So as soon as you got rid of that and you didn't care anymore about my own money, it rocketed. But let's back to this is 200%. If we now put this where my entry was at the top of this candle, as we spoke about before, and let's just clone that quick to give it a bit more of an insight. We step that on top. You can see that we are roughly around, because that was 200%, 400% gain. Okay, so 400% gain. So you'd put £500, you would have had 2,000 right now. So you would have made £1,000 off that one trade, regardless of your previous loss. Me, for example, though, as I've said before, when I got into this trade and my stop loss was quite high, as you can see, that's the original stop loss, obviously, that I had for there. My new one was half of that. It was only about like just over 100%, just over 100% of where my initial lot size was because my stop loss was down here. You could have moved it up as soon as I got that other buy up. Like I say, I sort of play around with my stop losses. I don't actually have a stop loss put onto my trade. I have just my charts, and I just rely on how price acts around them. Because, for example, like you saw here, that wick rejection come out would have taken you at your stop, and then would have pushed up in the direction you went. That's why I don't use stop losses. Well, voice went weird. Um, but that's why I don't use them. So I went in with like my normal lot size. So say, for example, again, you would trade a 500, you would have traded 1,000 on this, and we've been up 400%. You would have made 4,000 plus your original £1,000 investment, £5,000 on that overall trade. When on this one, you only just lost 1,000. Okay, so that's what I'm on about managing your risk and not being scared of losses, because this is exactly what I'm talking about. So what we're doing right now is waiting to see how it reacts back at this level. At the moment, not too great. You can understand exactly why, and we may be looking at a lot of consolidation, just for the pure fact that if it does breach out this top, this is an all-time high. If it does push out up above this candle wick, that will be an all-time high. So there's going to be a lot of consolidation, probably a lot of fake outs. I may even run into another loss, even though I've just had this. Like I said before, as soon as this come back up, I took my money to cover my first trade, and I waited for this to sort of fizzle back down, and that's where I got my second re-entry in, my proper trade back in, which was at the same level. So you can't go wrong with that. So this is right now. I haven't technically no losses. I had that one loss come in, made my money back straight away on it, and then I went back in with the 100% risk on the lot size. So now I'm just in another free run trade. That first one was just giving my money back. This one's my trade. So now that's where I'm at, and we're up about 400%, 360, 37, 380% on that trade. And let me just put it into perspective as well that this was taken on the 9th, and we are now sat on the 12th, 13th. So it's only a couple of days. Like I say, a lot of traders that you'll see this do, they won't get them sort of returns unless they're trading something like gold or GBP USD. The reason for that is gold is extremely volatile. It's extremely hard to be very good at gold and successful, because it relies on so much, and got so much volatility, and it is really hard to trade effectively. But there is a lot of money to be made on gold. But it's, I mean, you get an entry up here and your stop losses here, you'd be looking at risking 200%, and you could lose them 2-3 times in a row. So you've got to have a lot of capital, really, in my opinion, to trade gold effectively long term. That's what we're all in it for, is a long term. It could be good right now. You make 100 grand within like a couple of months trading gold. You could go, oh, this is brilliant, blah, blah, blah. But and then you start spending that money, or you keep it inside that account, and then all of a sudden you start getting them losses coming, and it starts damaging your portfolio and starts damaging your income, and then that's where things take a turn for the worse, and you start getting emotion trading, because you're like, oh fuck, I'm starting to worry now. And that's why you've always got to manage your risk and look for the long term. Short term is bullshit. No one cares about the short term. We got to look for that long term. Do you want this just for the last 3 years so you can go buy that nice car? Or do you want it to go on for 5, 10, 15, 20 years and have a strategy that you can adapt around the market and apply to different pairs? To then obviously keep yourself locked in at that long term goal. So 5, 10 years from now, you're better off even than what you were if you made 100 grand in a couple of months. You're not driving around in that R8, you're driving around in that Wraith. Um, you're not going on 1, 2 holidays a year. You're now going whenever the hell you feel like it. You're not living in a £200,000 house. You're living in an £800,000 house. You're not renting properties, you are renting out properties. And that's what you want to be aiming for, is that long-term goal. And that's where trading comes in. It's not a get-rich-quick scheme. It takes patience, and then all of a sudden you'll see these buy-ins come in. I mean, say you had £1,000 and you're using 20%, so you got £200. You would have made £600 on this trade. £800 on this trade off the £200, which sounds brilliant. And then you get into your head and think, oh well, if I use 10 grand, oh, made 35,000 on this one trade, or 40,000 on this one trade, blah, blah, and then it gets you into the buying big. But all you got to think is them little bits add up. Before you know it, you're making that. I mean, this one trade right now is up nearly 400%. Okay, the previous trade was up 900%. Think of how quickly. Just sit down and do the calculator. How quickly you can grow your account. And that's what you got to worry about. That you got to think about is this, like they say, what is it? The tortoise and the hare. Slow and steady wins the race. You don't want to be going head deep into this. Going, oh well, I've had a couple of wins. and I'm going to use big lot sizes. I'm going to go 50%, 50%, 50%, because one loss can wipe your whole account out, or at least 50% of your capital, which then takes a long time to then get that grind back up. You keep it slow and steady, you're only losing 10, 20% of your capital. And the next trade, you're earning 20, 40% of your capital back. And that's how your account grows. Before you know it, within a year, you could start with 1,000. And within a year, you could look at your account, you could have 400,000. And that sounds absolutely ludicrous, but if you apply the right mentality and the right strategy and the right learning curve, it's very viable. It all really comes down to emotions where people start getting the cap out, how patient they are to leave that money in there, and grow that account to how quickly they can dip their hand in and want to spend things. But that's just really a run over all my thoughts on a lot of beginners trading ZAR and the right ways to go about it. Like I say, you don't have to take it from me. But you'd be smart if you were too. But this is currently just want to give you another insight for anyone that is following this. They might have even gone into the same trade as it, using this sort of as a signal. I mean, you would have been late on a couple of the videos, but if you know how I trade, you might be able to sort of replicate this. But these are the things that goes on beyond the scenes that you need to have a grasp on. You need to know how these things work, because it gives you more of a further insight into it. You can't just rely on just this one thing. You can't rely off of that, because you'll get a false signal come out, and you won't know that that's a false signal. You won't know why that market is moved in its direction. You won't know why that these things are happening, and that's what will catch you out. And you'll have a loss, and you'll think, hang on a minute, the guy on YouTube showed me how to do it, and he's doing all right. And then it'll happen again, and you get another loss, and you think, what? He's saying he's getting a 90% win ratio on this. I don't understand why I'm losing. This is why, because when these things happen, I understand why it's happening. So then, as well as like understanding why it's happening and being able to verify false breakouts, it also allows me to have confidence within my trades. So if it does go against me, I can say, well, I know why it went against me. It's not my strategies doesn't work. It's not then I start losing faith in it. I know exactly why it didn't work. I know exactly why that trade went against me. But it's all about sticking to your plan. And that's sort of where we're at. I mean, we got 55 minutes, 55. We got 5 minutes left on this market. Got a bit of a wick rejection here. Does look like it might be a bit of a sell off. We might see it come back down to this line before pounds back up. We might see it sort of consolidate between this range here till we push back up. We might see it even drop down to there and get a couple of wick rejections below this line and push back up and sort of tally between here. We might even see it just come back down, touch here, come up a little bit, and then cut back through and retest these bottom ends or this sort of area here. But that's sort of where we're at. I just wanted to give sort of an insight and just keep you updated of where we are going through on this market. Like I said, I'm going to show you every single step of the way that I am physically taking, so that you can see exactly how it goes and into the thought and the mind process of a trader without all this bullshit going on of saying, like, oh, I thought this when I didn't think it. I mean, sometimes you got to put your hands up. I mean, there you are, this big red arrow to prove it. That was a big loss, but we made even a bigger win so far on it. But like I say, right now you could be thinking 400% up. I'll take that money. I'll take it. It's only been a week, and I'm going to take that 400%. Well, you take that 400%. You get where are you going to put your stop loss if you get that buy-in? Down here, you can have 300%, 250% of your that lot size, which means you have to use a smaller lot. You leave this to run. If this pushes this higher, you should expect to see a lot of momentum, because it'll have to get that higher up to then come down to that retest of that level before pushing back up. This trade could then turn, if it pushes up to these higher ends and breaks through, we could be seeing another 900% gain, maybe even a hundred, 1,000%. But we'll just sort of see how it plays out. You just got to play it out. This might come down and crash below here. We're not too sure. Which again, you'll lose 200% of that. You'll still make 200% on your initial trade, when you could have made four. But then you're trading with greed. You're not trading with strategy. You're not trading with logic. You are trading with greed. That's all you're trading with, because you're focused on that money. Oh, I could have got 400%. Oh, I'm an idiot. I've only got two. You're focusing with greed. That's what you're doing, and that's what's going to get you losing money. That's all I really want to say. I don't want to go into it and ramble on. I'm sort of in that that sort of mindset anyway of don't do this, don't do that, blah, 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 because I have been um, teach some new people today, and a couple of them sort of why I want to put this video out there and show them what I'm on about. A couple of them have sort of got that sort of side of that greed in there, so I'm just wanting to prove and just show to them and show to you guys that that's not the mentality to have, and this is like just to give you a little bit more confidence into what I am talking about. That's really all there is to say. Like I say, leave a comment if you want to see anything else we touch up on, or WhatsApp, or like my email or blah blah blah. Like I say, my email is starbtelford@gmail.com. Or you can leave a comment in there. I did leave my sort of like stupidly my phone number in there. Luckily, none of you guys have been idiots and tried spamming me up because it would have resulted in an instant block of your number. But if you do see it on there, then you can just quickly just add me on WhatsApp and we can talk through that. Like I say, I've got a couple more slots left in a mentor program. If not, and you just want me to, you only have a couple of questions to ask, and I can breeze over them. That's not really an issue. But obviously, if you are wanting that long term, then obviously that that can't be happening just willy nilly. But yeah, that's all there is really, guys. Yeah, I'll give you a touch up when we see either this crash through or this come back into that top side, just to sort of give more of a brush up on where we're at. Cheers.